This is Mac OS Ken.
Analysts react to Apple earnings. Tim Cook calls a case against Apple Misguided. And another Beats Pill speaker sighting. It is Monday, the 6th of May, 2024. I'm Ken Ray, and this is news from Mac OS Ken. Brought to you by yours truly and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSCan. While no ratings have been changed, a few 12-month price targets on Apple have been raised since last Thursday's March quarter earnings report and associated call. Let's run through a few notes associated with those compliments of Apple 3.0. Morgan Stanley analyst Eric Woodring says not only is a lot of bad news behind Apple, some of the bad news ended up being not bad. For example, the anticipated drop in iPhone sales in China did not happen, replaced instead by growth in mainland China. Installed base is at an all-time high, services revenue and gross margins hit all-time records, Apple's going to be buying back more shares, and now the investing world and the world at large can get set for whatever AI whatever Apple's going to announce at WWDC. While risks still exist, including losing the roughly $20 billion Google is paying Apple for supremacy in Safari and uneven consumer demand, Woodring and company see the tide shifting and expect top and bottom line growth to re-accelerate into the low to mid-teens next year. With that, Morgan Stanley maintains its overweight rating on Apple shares. The firm upped its price target on the shares from $210 to $216. BofA securities analyst Wamsi Mohan is doubling down on the factors that moved him from neutral to buy earlier this year. He seems even more turned on by ideas like a strong multi-year iPhone upgrade cycle coming, driven by generative AI, re-accelerating services growth, continued strong capital returns, upside to gross margins, and that list goes on. Mr. Mohan maintains a buy rating on Apple shares, saying they are still a top pick for his firm. He's upped BofA's price target on the shares from $225 to $230. JP Morgan analyst Samik Chatterjee indicates that better than feared March quarter results, plus a stronger than expected June quarter outlook, are setting Apple up for a strong fiscal year 24 ramp into an AI smartphone upgrade cycle in the coming years. Near term, he's looking for a boost from tomorrow's Let Loose event. Mr. Chatterjee maintains an overweight rating on Apple shares. He has upped his price target on the shares from $210 to $225. Lest you think it's all sunshine and lollipops, some names you know are not making with the Happy Days Are Here Again singing. KeyBank analyst Brian Nispel isn't convinced that whatever Apple announces in AI will drive significant upgrades and overcome competition in China. He's neutral on Apple with no price target set. Piper Sandler analyst Harsh Kumar indicates that while iPhone did better than anticipated, he and his would like to see further improvements in iPhone trends before getting involved. He's got a neutral rating on Apple shares and a price target of $190. Still, others sounded positive notes without moving any needle at all. Others like Evercore analyst Amit Daryanani, who says Apple shares should work higher from here as compares get easier, catalysts add up, and Apple executes on AI in a more capital-efficient manner versus other tech companies. AI announcements at WWDC should also work in the stock's favor in his estimation, keeping Apple as Evercore's top pick. Mr. Daryanani has an outperform rating on the Cupertino Company's shares. His price target on those shares is $220. So we should probably talk about that roughly $20 billion I mentioned a moment ago that Apple is getting from Google. Yeah, Cult of Mac ran a piece last week saying that that was the amount Google paid a couple of years ago to stay the default search engine in Apple Safari. This figure came to light through court documents submitted in the U.S. Justice Department's lawsuit against Google, according to the report. Apple makes so many billions. Is this enough to worry about? Yes. The piece from Cult of Mac indicates that Google's payment accounted for 17.5% of Apple's revenue in fiscal year 22. If the U.S. Justice Department wins its lawsuit against Google's alleged monopoly in search and advertising, the piece says Google might have to cancel its deal with Apple. That could be bad for Apple's bottom line, though some analysts figure Apple could just sell the default search position to another provider, albeit for less money. Could it be worse for Google, though? Given the iPhone's popularity in the US, Cult of Mac says it's crucial for Google to remain the default search engine on the devices. Now, according to the dictionary on my Mac, crucial means decisive or critical, especially in the success or failure of something. By that definition, crucial might be too strong a word, but it certainly could sting. As is often the case, the day of Apple's earnings last week prompted an interview with Apple CEO Tim Cook. A piece from The Verge had the exec telling CNBC that the Justice Department's case was misguided. We're not talking about the case against Google this time. No, this time we're talking about the DOJ's case against Apple itself. As a quick refresher, a piece from 9to5Mac says the DOJ contends that Apple has engaged in anti-competitive conduct by making it difficult for its users to switch to other platforms, restricting iPhone technologies to its own apps and services, keeping iMessage exclusive to Apple devices, limiting third-party digital wallets, and restricting Apple Watch compatibility. As for his thoughts on the case, Apple's CEO told CNBC, "I think the case is misguided, and we're going to fight it. It's my job to make sure it doesn't become a distraction. And so, if you look at what they're trying to do, is essentially use the law to define how we design products. And that shouldn't be like that." From Gatekeeper-type charges here in the States to a new Gatekeeper Appellation in the EU, a piece from Apple Insider has Apple responding to news last week that the European Commission has tarred iPad OS with Gatekeeper status. That would bring Apple's tablet under the purview of the Digital Markets Act. Scratch that. It will, not would, because Apple's not going to fight it. According to the report, Apple has announced that it will be complying with the EU's decision. Consequently, third-party app stores will be supported on iPad OS, though Apple has not given a specific date. The support will come with an update to iPad OS in the fall. Rolling over on the iPad Gatekeeper thing isn't Apple's only DMA adjustment over the past few days. The piece from Mac Rumors says the Cupertino company has also tweaked the parameters around its core technology fee in the EU to keep viral apps from bankrupting small developers. The way Apple explained the fee earlier this year, iOS apps distributed from the App Store and/or an alternative app marketplace will pay €0.50 for each first annual install per year over a 1 million threshold. Apple said then that the core technology fee would not apply to most developers. According to the company, 99% of developers would reduce or maintain the fees they owe to Apple, while less than 1% of developers would pay a core technology fee on their EU apps. But what if some developer lucks into an app that captures the public zeitgeist with a free app that shoots past that 1 million mark? Likely or not, that developer would probably be decimated financially. Apple has now addressed this scenario. According to Mac Rumors, independent and small developers who earn no revenue at all will not have to pay the core technology fee, so that students, hobbyists, and freeware developers off the hook, provided they are non-commercial and verify their non-commercial status on an annual basis. Additionally, folks who do want to make money will get a sort of 3-year runway before they have to start paying the full amount. They also have to make over 10 million euros before they have to pay anything under the tweaked program. More information is available on Apple's site. Hey, I can't remember. Does Apple do Beats announcements at product events like the one that's having tomorrow? The likely iPad-centric Let Loose event scheduled for whenever I wake up and hit play. 7 a.m. Pacific. Indeed. I only ask because there's been another unreleased Beats Pill speaker sighting. I told you recently of NBA phenom LeBron James toting one of the devices. Now, a piece from Mac Rumors says F1 driver Daniel Ricciardo has also been seen taking a pill on a walk. Could happen, may not. We'll find out tomorrow. Did you catch Apple's Find Your Friends video on YouTube over the weekend? Saturday was May the 4th, also known as Star Wars Day these days. Apple leaned into it with a Mandalorian-themed question. If you're all wearing masks, how do you know who your friends are and how do you find them? Apple Tech to the rescue, of course. Find your friends with precision finding on iPhone 15 and iPhone 15 Pro, says the promo. It's a cute ad. Speaks to a certain level of nerd in me. It's on Apple's official YouTube channel, if you want to check it out. And finally today, I'm thinking I'm going to rename Argylle the Big Little Movie That Could. I mean, it couldn't draw audiences to theaters, but the Apple TV Plus spy comedy is keeping people on their couches, well, on the edge of their couches. For the 3rd week in a row, Cult of Mac says the Bryce Dallas Howard, Sam Rockwell, Henry Cavill, John Cena, Catherine O'Hara, tons of other people movie is performing well on the charts of streaming interest trackers Just Watch and Real Good. On the Just Watch list, the film came in at number 7 for the week ending the 28th of April. That put it ahead of such films as Poor Things and American Fiction. I'm kind of curious about the differences in audiences for those two trackers. For the week ending the 2nd of May, Argylle was number 3 on the Real Good list, bested only by Shudder's Late Night with the Devil at number 2, and Netflix Anyone But You in the top spot. macOS Ken, brought to you by me and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/macOSKen. Advertising handled by Backbeat Media. Online at backbeatmedia.com. You can reach me a couple of ways. Info at macosken.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.